I can't get out. I can't do anything about it. So this isn't a little bit bad. This is 5 times, 6 times over my daily stop. At which point, I must admit, I sat there and froze. This was my equity curve for first year. Now, whilst I said that most people are generally flat, I want to point out a couple of things here. There were 2 very, very significant opportunities within that first year. This was 2008, of which I did extremely well out of. If you took those away, though, it's generally very flat, which is quite common, and then with a peak up at the end of the year. So I just want to make it clear that, this is somewhat of an anomaly produced by 2 very, very large specific events, which had they not come, this would have been a much, much smaller performance on the year. Sometimes you get lucky that these big events happen early on. The key to it is taking advantage of it. I look back and I'm like, I wish these had all happened in 2011, because that jump wouldn't have been 30,000. It would have been 300,000. So you can always look at these things differently. But the bit that we're looking at is this. What happens here? Where did that drop come from? That was in one day on one trade, and particularly the lessons on it. Right. So let's take you back to financial crisis, 29th of September, 2008. So Lehman Brothers had just gone bust. What we were seeing, or what was going to happen, is the US government was going to vote on the TARP, the Troubled Asset Relief Program. Troubled Asset Relief Program was there essentially to bail banks out, essentially to take on troubled assets off banks' balance sheets, meaning that banks then are not likely to go bust. Right. So this is it. We're going into the vote on TARP, Troubled Asset Relief Program. If this fails, there was a very distinct possibility this could bring down all of the US banks and insurance companies. This could be the end of the financial system. That was kind of what was going through my head. Maybe as a new trader, I was a little bit too keen on this, a little bit too hyped up about the idea, but that was my thought. So my play was, if this fails, which it was highly unlikely to, well, that was the expectation, this is going down, and it's going down real big. So next up comes the trade. You get the news, they've rejected the bailout. So at this point, my conviction was huge. This is going down. This is the biggest opportunity you're going to get. You've got to get short. You've got to get as much size in as possible. That was my main thoughts. So I chased this down. The goal was sell, 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 sell. Any flick back up, you sell. And I was trading the DAX. That was my main market. It was also the market I had the most size in. So that was the goal. It was like, right, sell as many DAX as you possibly can. I'd only managed to get 7. I tried to sell 15. I only managed to get 7 eventually because it was so thin and so volatile. But what I didn't have a plan to do is to deal with what happens if this market freezes and volatility stops. So I'd gone ultra aggressive, super high conviction. What do you do with it now? So at this point, I'm sure average price 5,685. The DAX had already by this point dropped about 225 ticks. So I sold some higher up, sold some as it flicks back in here. There's my average price, 7 short. Then the market closes. Volatility stop, boom, it shuts. At this point, I'm around 17,500 up. So I'm thinking, this is good. This is going to be an amazing day. But this is where the problem then comes. I didn't have a plan for that. I didn't have any plan as to what exactly I would do. So then the market reopens. Still on side. It reopens for 1 second and volatility stops again. Now, I've never seen anything like that since, that speed of stop. But from the low, from where it closed to where it reopened was 250 ticks. And it's now put me offside and stops. I can't get out. I can't do anything about it. So I'm then sitting there thinking, well, what do you do now? In my head, hoping that this then closes down, but it doesn't. What happens next? It reopens. At this point, I've now gone from nearly 20,000 onside to 12,500 offside. My daily stop as well, just to give you guys a bit of perspective, was 2,000. So this isn't a little bit bad. this is 5 times, 6 times over my daily stop. At which point, I must admit, I sat there and froze, which comes down to ultimately not having a plan. And that's the big lesson here. I didn't have a plan for, I was happy to take the risk, happy to go for it, but I didn't have a plan as to how I would deal with the market shooting back on me like that. So puts me way offside. I'm then sitting there thinking, I don't know what to do. And at this point, then it continues. It's now around about 200 ticks for my entry. So I'm now down about 28,000. At this point, I'm thinking, this is an absolute disaster. I don't know what to do here. And to be honest, I panicked. The one saving grace in this moment for me was when I panicked, I thought to myself, the last thing you want to do is get out. If ever you get out on a panic, generally that's the worst place, simply because there's other people probably panicking as well. So I thought, no, don't panic, step back, assess what's going on. This is not good, but you've got to try and get something better out of this. And so my kind of view was then, right, what can I get out of this? Where can I get out of this trade at a realistic level? And you saw where it reopened, I saw it drop back down. So I was watching it trading in here and I thought, well, we're into a range. Either it comes out the range and it's a bad loss, or it drops out the range and it's a not so bad loss. That was kind of the way I thought about it. But it was about at least having a little moment where I went, right, what exactly are you going to do with this? That was the key bit to this trade. Now, don't get me wrong, it was not a good result. I still ended up getting out as it spikes out of the range and thought, that's probably as good as I'm getting. Take the loss, which is 10,000. I looked at that and I thought, well, I could recover this if I go back to doing what I've been doing, stay consistent in my process, stay consistent with the trades that I take, I can get this back. But ultimately on the day, that was terrible. It was a horrible feeling. I sort of sat there for half an hour before I went home. So I thought, I can't drive home at the minute. But the big lesson for this for me was, one, don't trade, or trade in the wrong market. The right market was the S&P, not the DAX. But I was greedy and went for the DAX because it got more size in the DAX than the S&P at the time. 2, over-convicted on a trade when you couldn't get in. So I tried too hard to sell. I chased and I chased and I chased, which put myself into a dangerous position. 3, the other big lesson was to not panic when things go wrong and objectively ask yourself, what do you do here? Things don't have to necessarily be as bad as they're going to be. They can be bad, but they don't have to escalate. And that was essentially the story of my worst ever trade. I hope this never happens to any of you. I hope none of you ever have to deal with something like this, but it's something that, I've taught people since, what do you do on a volatility stop? How do you deal with that? What's your plan? How do you get out of that trade? What do you do in various different situations so that if you're encountered with these very freak opportunities and very freak mishaps, you can deal with them and either make the good ones very good or the bad ones not as bad as they have to be. And ultimately, that's what generates success. This was a terrible day and it was 10,000 down. But the 2 best up days were 30 and 40,000 up. And it's the mitigating that downside, but also making sure you really get paid on the upside that makes professional traders.